Good morning, everyone. Uh, our role play topic is a tax compliance issue in Malaysia. The scenario we selected is a small business owner failing to report income. The story takes place during an online tax consultation meeting through Microsoft Teams. After receiving an LHDN reminder email regarding tax records, the business owner, Yu Shuyao, becomes worried about possible mistake in his tax filing and urgent contacts tax agent Zhu Xuyu of consultation. The main issue in this case is that the business owner fails to report all business income, especially cash sales. In addition, some personal expense were incorrectly claimed as business expense, and the business records were incompleted.
Good morning, everyone. Yoshua, I received your message saying that you were worried after receiving a LHDN reminder email regarding your tax filing. Could you explain the situation first?
Good morning. I run a small bakery cafe in Selangor. We sell bread, cakes, and drinks, and we also receive orders through WhatsApp and Instagram. When preparing tax return, I only planned the report money received through my bank account and QR Pay, which is around 80,000. But now, I'm not sure whether it's correct.
All right. Today we will review three areas: income, expenses, and record keeping. So, Chu Fuqishen, you are responsible for organizing the business records, right?
Yes. While organizing the documents, I noticed that the bank records did not match the actual sales records, so I suggested not submitting the tax return yet.
We originally thought that as long as we reported the money received in the bank account, it would be enough. Cash sales that were not deposited into the bank should not count, right?
That is exactly the biggest issue today. Under the self-assessment system, taxpayers are not responsible for reporting income accurately. It is not only the money in the bank that counts as income. All income earned from the business must be reported. So, Yoshua, you mentioned that you plan to report 80,000 ringgit. What about cash sales?
I did not include the cash sales. Some customers pay in cash, and we did not issue receipts for daily transaction. Since the money did not appear in the bank statement, I thought it did not need to be reported.
That is a serious misunderstanding. Cash sales are still business income, whether customers pay by cash, bank transfer, QR Pay, or online platforms. All business income must be reported.
I checked the sales notebook and WhatsApp order records and found that around 25,000 ringgit of cash sales were not reported. That means the actual sales should be 80,000 ringgit plus 25,000 ringgit equal total 105,000 ringgit.
So this is the key issue today, the missing 25,000 ringgit. If you only report 80,000 ringgit, it will result in underreported income.
I only realized now cash income must also be reported.
I will share a simple summary. You can see this. From this table, we can clearly see that replying only on bank statement would cause the 25,000 ringgit of cash sales to be omitted.
I want to confirm a few common beliefs. First, if the cash is not deposited into the bank, it does not need to be reported.
Incorrect. Cash sales are still business income and must be reported.
Okay, second, if there is not receipt, the income doesn't need to be reported.
Also incorrect. The absence of a receipt doesn't mean there's no income. Businesses should use sales records, other records, or cash records to support the income amount.
Okay, I know. Third, since the business is small, including some personal expenses as business expenses should not be a big problem.
That is incorrect as well. Only expenses related to generating business income can be claimed as business expenses. Personal expenses cannot be deducted freely. So, 主持人, besides the unreported cash sales, what other issues did you find?
I found around 6,000 ringgit of personal expense include as business expense. Example include household, grocery, personal phone bills, petrol for family trips, and birthday dinner.
But I sometimes use my phone to reply to customers, and when buying supplies, I sometimes buy items for both the cafe and my family together.
If an expense is partly for business and partly personal, it must be allocated reasonably. For example, only the business portion of phone expenses can be claimed. Purely personal expenses such as family dinners cannot be treated as business expenses.
What happens if these expenses are incorrectly claimed?
It will reduce the reported profit and lower taxable income, causing the tax return to become inaccurate.
The records also are also incomplete. Some sales are written in notebooks. Some are in WhatsApp messages. Some cash sales were never recorded, and some receipts are missing.
This increased tax risk. If LHDN conducts a review or audit, the businesses must provide sales records, receipts, invoices, bank statements, and expense documents. So, to help everyone better understand the compliance risk, I invited LHDN officer Zhang Tianyou to join the meeting.
Okay, good morning, everyone. I will ask a few simple questions to help you understand what may happen during a tax review. Shu Yao, if LHDN requests complete daily cash sales records, can you provide them?
Not committedly, some cash sales were not recorded properly.
If LHDN finds that your bank income is 80,000 ringgit, but your actual sales record show 105,000 ringgit, can you explain the difference?
Now I know 25,000 ringgit difference comes from the cash sales, but previously I mistakenly thought cash sales did not need to be reported.
Okay, if LHDN asks you to prove that the 6,000 expense were business related, can you provide sufficiency proof?
Not completely, because some of those expenses were actually personal expenses.
Okay, here is the issue. Tax reviews do not only examine the numbers in the tax return, but also the supporting record and the evidence behind those numbers. If income is underreported or expense was wrongly claimed, additional tax and planning may arise, even if the mistake was unintentional.
So the best approach is to correct the records before submitting the tax return.
Correct. Accurate reporting and proper record keeping are essential for the tax compliance.
Based on today's discussion, I recommended 5 correct actions. So first, include the 25,000 ringgit cash sales in the income declaration. Second, remove or reclassify the 6,000 ringgit personal expenses from business expenses. Third, reasonably allocate expenses that are partly business and partly personal. Fourth, organize all supporting documents, including sales records, bank statements, QR pay records, WhatsApp orders, invoices, and receipts. Fifth, create a proper daily sales recording system to avoid similar problems in the future.
I understand now, and in future I will report all income, including cash sales, and clearly separate personal expenses from business expenses.
I will recognize the account by separating cash sales, bank transfers, QR pay transactions, and online orders, and I will properly store all supporting documents.
I will also help record daily cash sales to ensure that every transaction is documented.
That is a correct approach. Good record keeping not only reduces the tax risk, but also helps business understand their actual financial performance.
To conclude, this case highlights 3 important lessons. First, all business income must be reported, including cash sales. Second, personal expenses should not be incorrectly claimed as business expenses. Third, all figures reported in a tax return must be supported by complete records and documentation.
This role play demonstrates how misunderstanding tax rules, poor record keeping, and incorrect expense claim can create tax compliance problems for small business owners. Through this online tax consultation, the business owner discovered the missing 25,000 ringgit and corrected the issue before submitting the tax return. This shows that tax compliance is not only about paying taxes, but also about owners reporting proper documentation and responsible tax behavior. Thank you for watching.